Hi, everybody. It's a new week, Tuesday, November 12th. We thank all those veterans yesterday with Veterans Day and the honor that they deserve. Wanted to go over what's going on today in preparations of CPI tomorrow and then PPI later in the week. We've got a lot of fluctuations going on in the market today, that's for sure. We had a litany of Fed speakers today, no less than five of them. I want to focus on one of them, Neil Kashkari, Minneapolis Fed, indicated that if inflation surprises to the upside, the Fed could give a pause to a December rate cut. The big question now is, will we get a rate cut December? And then what happens the first of the year? Also said the terminal or neutral rate long-term projection of where we're going to end up probably has gone up a little bit from what the original SEP or Statement of Economic Projection was this past meeting due to multiple different factors. And higher productivity will mean a higher neutral rate. So those are some interesting comments. Also said the Fed won't model new policies from the new administration until they become clear. And that's one of the reasons where we're seeing some volatility in the market. Interesting here, tariffs are not, underline, not inflationary if they are one-off. Tariffs can be inflationary if in retaliation. So a lot of the talk has been President-elect Trump's potential inflationary tariffs, and it has definitely boosted the stock market, but put pressure to the upside on the bond market, which in turn puts pressure to the upside on mortgage rates. National Federation of Independent Businesses, or small businesses, put out their monthly optimism index, and it raised 2.2 points in October to 93.7, which was a healthy amount above expectations of 91.9. What's all this put into the market? Well, yeah, the stock market's still moving up. Mortgage-backed securities are down 42 basis points. That means mortgage rates are higher. The 10-year Treasury is up 9 basis points now to 4.434. Now, a few weeks ago, I kind of put an expectation. My thought was the 10-year was going to come really close to approaching 4.5 before we started to level off. And I still think that's true. What's weighing on the bond market are really two things. Clarity on what the new policies will be and how they will affect spending, GDP, and also deficit. That has definitely, the concern there has definitely raised the mortgage rates through the 10-year bond and mortgage-backed securities. So there's a lot to tell. Now, tomorrow, one of the other reasons we're getting some pressure on rates today is the expectation that we're going to get maybe a little higher inflationary numbers tomorrow through CPI than what we originally, than what the market really is going to necessarily like. I'm letting out here a senior analyst, Mr. Gibson. And the reason being is because we've talked about it, those replacement numbers are not beneficial for this month or next month. They won't start getting better until January. The betting market now for the Fed futures market is the terminal rate. I think I was just listening to CNBC to 3.8%. That is probably 25, 30 basis points higher than what we were just, expecting maybe just a month and a half ago. So that uncertainty, that question, along with the election, has pushed, continue to push mortgage rates higher. As we've been saying, this gives an opportunity to buyers to have less competition. In fact, we have one putting an offer today that we think is going to get accepted. Don't let higher rates push you away from buying in the best buyer's season of the year, which is October, November, December. You might very well get a deal that you won't see again, especially once we see some warm weather out there and the seasonal buyer's market that comes on. Will we get lower in mortgage rates next year? Most likely. But if you wait for the lowest rates, you're going to pay more for the house because of competition. Give us a call. We'll break this down more. We can help you understand what we're talking about, go through more information. The Market Update Desk, 616-293-2189. We'll do a full breakdown of CPI tomorrow, but between the Fed comments and possibly a little uptick in inflation, we're not too positive or rosy on what the market's going to bring tomorrow. Hope this helps you out. 616-293-2189.